Well, I think the commodity sector has had a big run, and probably that's one area that you want to avoid. You want to avoid any areas where the infrastructure has not been adjusted to the total computerization of the world that we see it now. For example, if you have retailers who have not adjusted uh, their operations to digitalization, then they've got a problem. So you have to look at companies that are digitized and are moving in that direction because that's where the productivity is going to be increasing.
What's the commodity exposure play in your opinion? What should we be looking at?
Well, as you know, yes, I like gold and I like the precious metals, but to hold them physically and not necessarily to hold the mining companies. And I believe that given the incredible run that commodities have had, it's probably not a good idea to go into the commodity space. And we find that a lot of these commodity companies are not that profitable as some of the holdings, for example, in semiconductors and that sort of thing. But yes, holdings, physical holdings of gold, silver, platinum, palladium, I think is the way to handle it.
Okay, Mark, do you have a view on oil? Obviously, we've seen this asset run up over the past 12 months, a real recovery in the fundamentals here. Should investors be exposed to oil or the oil sector in any way?
Yes, we've had an incredible run, and that's really a recovery from the COVID problem. So I think we're probably at where we should be, 60 to 70 dollars a barrel. So you're not going to see an incredible boom in oil companies, although some of the companies, as you just heard about, privatization of some of these companies, state-owned companies, could be interesting because with privatization, as you know, sometimes profitability increases and things get better with these companies. But generally speaking, we're not that excited about oil plays.